Welcome friends. In our previous session, we talk about input tax credit and also talk about what is input and what is input tax. So we all know that input or inputs means whatever material, whatever services I avail or goods purchased for my business, and after processing these products or the goods, manufacture a final product, and when I sell it, I have to pay GST. So in case of cycle industry, if a cycle manufacturer buys steel, pipes, rubber parts, rubber and all, and after processing all these things, he manufactures a cycle. So cycle is a new product which is subject to GST, and its raw material and components or rubber parts which he purchased for manufacture of this cycle are also subject to GST. So whatever amount, whatever tax he paid on his purchases, means on the purchase of steel, rubber parts or components, are their inputs, and tax paid on that, that is input tax, and setting off of its output liability against these taxes paid on inputs is a ITC, input tax credit, available to manufacturer. So friends, this concept I told you, section 16, section 17 of CGST Act is very relevant from business point of view and also from GST point of view. So in today's discussions, we will continue with the concept of ITC, input tax credit, and also how finally tax is paid, because there is a possibility that my outward liability on my sale, the GST liability is 100 rupees, but taxes I paid on my inputs is only 60 rupees with me. So 40 rupees, the difference between GST payable and GST I have already paid to my supplier on my inputs, there is a gap, and that gap of 40 rupees will be paid in cash. So there is a proper mechanism in that as defined in GST, because we all know that GST is IT based tax system where IT played a vital role, and GST portal where everything is uploaded or where everything is shared with the government agencies or other stakeholders. So it's a foolproof mechanism how much ITC I am having in my account for various procurements I did in past, and how much sale I have done and how much is my tax liability that I need to pay, and if there is a gap between tax payable and ITC I have, it should be paid by cash through a proper mechanism given in GST law. So we'll see that in our today's presentation how things move. So friends, in GST, when we talk or when we say that we have ITC with us or input tax credit availability with us, or I need to pay my taxes under GST, different types of ledgers are maintained. In business, we maintain these ledger in our books of accounts on daily basis, and on GST portal it is maintained or taken care by GST portal and their team, run by GSTN network, constituted a company for GST purposes when GST came into picture, and whenever we are submitting details, whenever we are sharing details, uploading details on GST portal, ledgers are maintained there in electronic form, and different ledgers give us different information. So if we talk about GST and business transactions, these ledgers has been maintained at GST portal, and parallelly we also maintain these accounts in our books of accounts. So first is cash ledger. It is maintained on GST portal for whatever amount of cash, whatever hard cash we will deposit with our bankers and upload these deposit of cash to GST portal. It will be reflected in cash ledger maintained at GST portal. Why it is so, why it is maintained, that we will discuss later on. Then there is another ledger on GST portal, that is credit ledger. Means whatever credits I am available, means my ITC available to me on my procurement, that will be reflected in this electronic credit ledger. Then another is electronic liability ledger, means whenever I am selling my products, my goods, I have to pay GST on the sale of these goods. So that is my liability. So that liability is maintained or recorded in this liability ledger at GST portal. So friends, whenever we are doing business, as I told you, if I am a manufacturer, I purchase raw material. To process this raw material, I use machines. And to run these machines, I deploy labor or for other works also. Apart from this, I need consumables. I need some technical services. I need electricity. I need help of auditors, technicians from outside, or maybe advocates. I also need engineers services as consultants. I also use telephones network, telephones, net, internet. I also use advertisement agencies services and so on. So all these are my inputs. All these are my inputs. And all these inputs are subject to GST at different rates. My raw material may be subject to GST at the rate of 5%. My different machines may be having different rate of GST from 5%, 12%, 18%, 28%. My labor is my employee, so there is no applicability of GST on employee services, because where there is an employer-employee relationship, GST is not available and it is out of the preview of GST. But if I have contracted labor, here labor and then contractor labor. So if I have contractor labor, this is again subject to GST, maybe at the rate of 18%. Then consumables, many times I use many chemicals or oils and lubrications, maybe subject to GST 18% or 12%. Then technical services from different category of professionals, subject to 18% GST. Electricity, I told you, it is exempted under GST, so no tax. Auditors, technical advocate services, yes, at the rate of 18%. Engineer services at the rate of 18%. Telephone 18%. Advertisement agencies 18%. Insurance again 18%. So I have so many inputs and have hundreds and hundreds of invoices on daily basis or monthly basis to my inputs. So it is difficult to keep a track of each and every transaction. In a big companies, invoices are in the range of thousands or even lakhs of rupees in numbers. So to keep proper track of each and every tax, because all these taxes what I have paid on my inputs are available to me as ITC, input tax credit, subject to the conditions of section 16 and restrictions of section 17 and also other restrictions. So there is a proper system to record these transactions, so that in tomorrow when you will sell your goods, when you sold your goods, you have to pay GST, and when your liability comes, it is subject to set off against all these taxes you have already paid to your suppliers. So we need a proper and transparent system of recording transactions. That is why at GST we have cash ledger, we have liability ledger against my sale, I have credit ledger for my all inputs available to me. So this way we record each and every transaction in our books of accounts and also at GST portal. So friends, when I procured all these things, I process my raw material through machines. I manufacture my final product, maybe cycle, maybe cement. So if it is cement, GST is 18%. So if during any month I have sold cement worth rupees 10 lakh rupees, so 18% GST is applicable on it, 1,80,000 rupees. It is my outward liability. Outward liability. So when I send the information, upload the information on GST portal, this my outward liability will be depicted in my liability ledger, because this is my liability I have to pay to the government. I have collected it, this GST, from my consumers, from my buyers, and because there is a law that once I have collected the taxes, I cannot keep these taxes with me. I cannot retain these taxes. It's a crime if I don't pay to the government. Whatever amount of tax, maybe an income tax, maybe GST, maybe sale tax, maybe local area development tax, maybe municipal tax, whatever taxes are there, if I am collecting these taxes from consumers, citizens of the country, I have to pay to the government. I cannot retain any tax with me. It's a crime. So friends, here also, whatever amount of tax I have received from my consumer, I need to pay to the government. This is my liability, which will be depicted on GST portal under liability ledger, because I am supposed to upload my sale data to GST portal. How we upload under GST, that we will discuss in our return session when we will talk about filing of returns under GST. So this way, when I sold this much of cement, I have declared to the government that I have sold this much of cement. I have declared to the government that I have this much of liability of taxes to be paid through GST portal. Similarly, if I am selling cement, all these items which I have purchased from market, my supplier also declaring to the government. My suppliers, because when they declare to the government, it is their liability. So I am their consumer, I am their buyer, so I will pay taxes to them and they are supposed to deposit it to the government, the way I am doing here. So here I am buyer, some other one is a supplier. Here I am supplier, some other one is a buyer. So this way market comes, runs and circle goes on. So here my liability is 1,80,000 rupees for a particular month or a particular tax period. So friends, during this tax period for which my liability is 1,80,000 rupees, I have to work out all these things. How much is my ITC out of these procurements? So my ITC, let's say, is 60,000 rupees. My ITC out of these procurements is 60,000 rupees. So in my credit ledger maintained on GST portal, this amount will be depicted. So it means I have declared my liability, and means outward liability I have declared 1,80,000 rupees, whereas my input is only 60,000 rupees, and it is net ITC after considering section 16 and section 17 conditions. So gross amount may be higher than this, let's say it's 1 lakh rupees. So out of this 1 lakh rupees, which is my gross ITC, 40,000 rupees ITC is not available to me for any or other reasons as per the section 16 and section 17 conditions. So net ITC available to me is 60,000 rupees. So before paying this 1,80,000 rupees in cash to the government, because I have collected it from my customers, so customers have paid me along with my sale value in my banks or through checks. So when I will pay this amount to the government through GST portal, I will check how much is my ITC available to me on my ITC credit ledger. So difference is here 1,20,000 rupees. This I need to pay in cash through GST portal to the government. So this is my total liability. This much of ITC available to me. Balance I will pay to the government in cash. So in the total transaction of 10 lakh rupees, I manufacture goods worth rupees 10 lakh rupees, which includes my margin also, my profit also. I procured the different inputs worth rupees 7 lakh. So after processing the values goods and services for the value of 7 lakh, I made a final product of 10 lakh. So 3 lakhs is my value addition. 3 lakhs is my value addition. So this way GST plays its role of giving ITC or giving ITC benefit to you and asking you to pay your taxes on your final product. So whenever you are determining your tax liability, it means your value of goods must be correct enough. So you must calculate the value of your products very carefully, because on these values GST will be calculated and to be paid to the government. If your goods are overvalued, means you are unnecessarily paying tax. And if your goods are undervalued, you are evading tax. Government will be after you for recovery. So taxes depends on the value of the products, and products costing and products value should be determined very technically, very accurately, so that there should not be any dispute in future. So friends, as I mentioned you that there are different type of ledgers maintained at GST portal. I will show you these ledgers also in our coming presentations. So electronic credit ledger. Before going into credit ledger, I tell you that section 49 of CGST Act deals with payment of taxes. So payment of taxes includes payment of taxes by setting off my ITC as well as payment of cash. So in electronic credit ledger, as I told you that the credit available to me, and credit of what? Credit of ITC. So it says in electronic credit ledger, all credits accrued or assessed on amount of inward supplies, on account of all credits on account of inward supplies. And inward supplies are, as I mentioned you in my previous slide, all these are my inward supplies: raw material, machines, contractor labor, consumables, technical services, like this. So all inward supplies are subject to GST, and whatever tax I have paid on my inward supplies is available to me as a ITC within tax period. That is for 1 month, you can say. During 1 month means if we are in June, so during June whatever items I have procured, that is my ITC, and it will be reflected in electronic credit ledger when I will declare things to GST portal. This ledger is maintained at GST portal. I already told you this ledger is being maintained by GST portal based upon the information uploaded on that. Maybe by me as a manufacturer, or maybe by my supplier who has supplied goods to me and has declared his liability to GST portal. Then the electronic credit ledger can be viewed only by taxpayers. So any individual cannot assess credit ledger of anyone unless you are having proper login ID, password at GST portal, and you have GST number, you are registered person on GST portal, you will be able to assess your credit ledger, or by the officers of your area. Means wherever you have business, there always be a GST department over there, maybe state government or central government, and the officer who is dealing with your cases or who is under whose jurisdiction you are working, that officer is also having access to credit ledger of yours. He can view how much credit is available to you and how much you have declared in your GST portal. Then amount available in this electronic credit ledger may be used for making payment towards outward tax liability. So I told you that in GST, whenever I am selling my goods, in previous slide I have shown you that if I sold cement worth rupees 10 lakh rupees, there is tax liability on me at the rate of 18%. So this amount available in my credit ledger is available to me to arrest against my outward tax liability under this act or under IGST Act. Means in case of interstate supply or in case of intrastate supply. We talked about these two concepts during our place of supply and point of time for taxation purpose. So this way electronic ledger is used by registered person and government authorities to determine how much credit ledger is available to you because of your input procurements. Further, all return related liabilities, means whenever we are doing any business, whenever we are selling goods, whenever we are procuring something, we are supposed to file returns under GST. We will talk about the returns in our next sessions. So when we file our returns are being filed on GST portal, they are linked to my credit ledger, electronic credit ledger. Similarly, like credit ledger, we have liability ledger, I mentioned you. So when I declare my sale to GST portal, it is depicted in my electronic liability ledger, how much liability I am having. Payments made from electronic cash ledger and or set off from electronic credit ledger to discharge liability are recorded in this ledger. How much is my liability and how much and how I have made or how I meet this liability, either by cash or by having amount from my credit ledger. This way my liability is met. So friends, in GST I told you that everything is maintained properly with full transparency in a set system. So for electronic credit ledger, we have set format, what information to be mentioned over there, how it should look like. So this is predetermined form available on GST portal and it is in form GST PMT 02. The format is given there, it is prescribed format. As I told you, in case of invoices, there is no prescribed invoice format, but information is mentioned there in the law what is to be carried by your invoices. But here it says electronic credit ledger must be maintained in prescribed format and format name is PMT 02. And it is to be maintained by each registered person at GST portal. And whatever credit will be available to him, it will be credited to this ledger so that he can use this credit benefit ITC against his output liability. So friends, so far we know that ITC is a benefit to any businessman for the taxes already paid by him to his supplier. So this benefit will be available to him in electronic credit ledger. Amount will be credited to his electronic credit ledger, and whenever we want to reduce this balance, because whenever we are using this amount for the payment of taxes, this amount gets reduced. For example, if at any point of time, if in this credit ledger I have 1 lakh rupees it will be shown as credit balance, as it is shown in our bank book passbooks. Whenever you are depositing money to bank show it as a credit balance in your passbook. If it is debit balance, then it means you have taken loan from bank. So in bank, whenever you are depositing your money in saving account or even current account, it will be shown as credit balance to you. So here also, in the same principle, whenever any ITC accrued to you on your procurement, it will be shown as credit balance in electronic credit ledger. So when you are going to pay out of this 1 lakh rupees to meet your outward liability, and suppose your output liability is 50,000 rupees, so this electronic credit ledger will be debited to you, means government has paid to you because you have used this amount for your own liability. So electronic credit ledger shall be debited to the extent of discharge of your tax liability. So you have sold your goods, now you have tax liability to pay to the government. So you have option either to use your electronic credit ledger balance or you pay through cash. So if you have credit ledger balance, definitely you will use this credit ledger balance first, because this amount you have already spent on your procurement. So you will exhaust this balance and discharge your liability. So in this case, if my outward liability is 50,000 rupees, definitely I will use this 1 lakh rupees and it will be debited by 50,000 rupees, and my balance remains there 50,000 rupees as credit balance after meeting my this tax liability for that particular month. While claiming the refund of any unutilized amount of electronic credit ledger. So friends, it happens many times when at this point of time when you are having tax liability, you use this balance of 1 lakh rupees, and afterwards something has happened and gone wrong that you decided to close your business. Or sometimes you export the things. So when you are exporting, because export is not subject to GST, so you have exported the things, your goods, and the GST liability is not there, so you are eligible to get it refund in your account, in your bank account. So this amount of 50,000 rupees which is lying in credit ledger unutilized, because you know that in future this will not be used because you have now exports only. So any time when you have refund amount from the government, it will be debited by 50,000 rupees, will be debited to you. Now the balance is nil. So this way, this credit ledger is depicted information on GST portal, because every time when you are doing any action, you have to declare on GST portal through set mechanism, and accordingly your ledgers will be depicted there. Your balance will be shown in your ledgers. So whenever you are having any refund, you can claim refund as per section 54 of CGST Act, and this ledger will be debited and amount will be transferred to your bank account. So it will help you in your working capital. So friends, in business many things happens on daily basis. It happens if you people are procuring or buying things online through e-commerce operators. We have so many e-commerce operators, Amazon, Flipkart, like this. So it happens many times that you place an order on Amazon for a mobile and you pay amount online, and mobile will be delivered to you at given address in 3-4-5 days, and you can track the transaction also. So when actual delivery was given to you on a given time, you opened it and you found that this mobile has some problem and it is not that particular model which was ordered by you. What you will do? You will return it by uploading the information on their respective portal, on Amazon portal. So it means you have returned that particular mobile. So from suppliers' point of view, when the supplier supplied this mobile to you on your order, he will raise invoice in your favor. You have already made payment to him online. So he will book his sale of mobile, and if this mobile is of 1 lakh rupees, 18% GST is there, then tax liability for that particular supplier is 1,80,000 rupees, 18,000 rupees, sorry. 18,000 rupees is liability on 1 lakh rupees of mobile. He will pay to the government 18,000 rupees. But after some time, when you reject this material, this mobile, you will send it back to the supplier. Their people will come and they will collect it from you, and you have already posted on their portal that it is rejected, it is not accepted to me. So when the mobile is rejected by you, you posted the information on portal, it is a sale return for supplier. Sale return, material rejected by customer. So then what will happen? So in case there is no sale and supplier has already paid tax to the government, let's take example, he has already paid tax to the government. Tax was paid because sale was there. Now sale is rejected, sale is returned now, material is returned by customer. So there is no sale. So what the supplier will do? He will reduce his sale because his sale has come down, this material is not sold now. And accordingly, his tax liabilities will also come down. So he will create similarly system with government that his sale is not there. So he will take back, or his liability is reduced. So tax should not be paid to the government. So these things happen on daily basis in the business, and accordingly we have to record our transactions. And same is the case with GST also. So if your credit ledger was debited once upon a time because of payment of your taxes, it can be recredited also. Credit was given when procurement was done, and debit was done when you pay taxes out of it. And there are possibilities, there are cases when recredit is required and recredit happens. How? If refund so filed is rejected. So I told you in my previous slide, here, if you have exported the things, you will get amount balance back. So at the time of claiming your refund out of this amount, when you will file your application of refund, your credit ledger will be debited automatically. When you file your refund application, it will be debited automatically. And if this refund application is rejected, if officer concerned reject this application, then what will happen? So when you applied for refund, your credit ledger is debited. When officer will reject it, it will be reversed. So it will be recredited. It will be recredited. So here again your balance will remain 50,000 rupees as a credit balance in your ledger. So shall be recredited in electronic credit ledgers. Where a registered person has claimed refund of any amount paid as tax wrongly paid. It happens many times because of some clerical mistake or because of some accountant mistake or otherwise, you paid wrong tax, you paid excess tax, or maybe because of there is change in invoice value or the quantity or the rate, your tax get amended and you came to know that you paid excess tax. So if tax is paid in excess for which debit has already been made, I told you that when you are going to pay taxes, if ITC credit ledger balance is there, you will use that balance first and your credit ledger will be debited. So in given case, if your liability was 100 rupees and your balance available in your credit ledger was 1000 rupees, so you paid this tax of 100 rupees, your remaining balance is 900 rupees in credit ledger. But later on you came to know that this 100 rupees is actually wrong figure, it was 85 rupees. So means you have paid 15 rupees excess. So it means your balance should be 1000 minus 85. So your balance should be 915. So 15 rupees will be recredited. 15 rupees will be recredited to your credit ledger because you paid excess tax. Later on you came to know that 15 rupees has been paid excess. So it will be recredited to your account so that you should have actual amount. So shall be recredited electronic credit ledger. It will happen only when you declare the things on GST portal through your returns. Because to interact with GST portal, returns are the media or the medium through which you are connected with your GST portal and with all these credit ledger, cash ledger or liability ledger. So we'll see everything in our next slides. But here I am just trying to make a clear picture for you that how things happen in GST and GST portal.